Happy New Year. What's up, everybody? Eric here, Mr. Fired Up Wealth, and this is the Bull Train Podcast. This is episode 4, and I've got members from the community, from the Fired Up Wealth exclusive community, our private community. These are VIP and Platinum members, and we've done three of these so far. This is our 4th one. We generally do it in our private community in Patreon Discord. We're doing this today on YouTube just to see if there's interest out there, and if you guys support it, we get lots of likes and comments and views, and you watch this video in its full duration, we'll probably put some more on YouTube. So definitely support us. And if you have questions or comments, drop them below. We want to have some interaction here. And all these guys, are happy to reply to you as well as myself. Derek, and he is kind of our EV and space guru in the community. I've got Stuart. He really focuses a lot on metaverse and NFTs and cryptocurrency. Of course, all of us invest in all kinds of stocks, but those are kind of our areas of expertise. I'm more of the semiconductor and SaaS type of guy, and I'm more on the sales side. I was in software sales, SaaS sales for over a decade. I've got Tony C in the place to be, the first patron ever, and he's actually on the software side as well, but from the developer perspective. So the two of us kind of round each other out on that software side. And we generally like to just talk about the stock market, stocks we're buying, current events, news. It's a podcast really about growth stocks. It's called the Bull Train Podcast, and right now we're not on a bull train, we're in a bear market, but we're trying to accumulate wealth for the long term. So how you guys doing tonight?
Good.
Excellent, man. Good.
Awesome.
Yeah. So first topic of the day, I guess I want to just talk about maybe some of the stocks that you guys are watching, and then later I want to talk about maybe stocks that you've been buying maybe the last couple of days. So is there anything that's on your radar that you've been watching, not necessarily that you've been buying, but what's on your hot list right now? Just give me 2-3 stocks. So start with Derek.
Well, I obviously keep a close eye on Tesla always, especially like right now, because it's actually when it got below 105, it actually got below my initial purchase back in 2020. But I haven't added yet because I still think that it's going to go under 100. I'm closely watching CrowdStrike, and now that it's dropped, below 100, to a certain almost 90, I'm watching that closely. I saw Snowflake is back down around 120. I would like to see that back down to its like the low. What was it, like 110 or something at its low? And I also still have my eye on Nvidia. I'm thinking that'll come back down at some point. Like those are the three that. But just I know I'm kind of going off the books here, but I'm also watching Rivian.
Okay.
Too.
What kind of price target are you looking for Rivian?
I would like to see it below 10 to start, but I still think that Rivian should be right about where Lucid's at. Polestar.
Where do you think Lucid will bottom out at?
Well, I think Lucid should be in the $5 range.
Well, it was for briefly.
Well, I'm saying like that's where. I don't know if it'll bottom there, but I think that's where it should play because, it's like I've said, Polestar is double the capacity of Rivian this year, or that's their goal, and they're at like $4 a share, and they're global already. So it doesn't really make sense that now they don't have the money that Rivian does. Polestar doesn't, but I still think. When you're just talking about in terms of, production output and stuff, and I think Rivian somewhere between 5 and 10. I think 10 is a good place to start, but
where's that now? What's the market cap? Let me just look it up real quick. So Rivian,
it was like 17 last I looked.
Yeah, right now. Market cap is $15.25 billion. It's at $16.56 close today on Rivian. So Lucid, This is one that I wouldn't mind adding. I just don't know where it's going to go for sure. It's at 625 market cap, 10.8 billion. They're burning so much cash.
Mm-hmm.
I'm going to make people upset that are watching this, but looking at a chart today, you could see it in the threes, and I'd be a buyer there. And I'm not saying it's going to happen. I'm saying it could happen the way that this pressure has been going. You know, I'm going to release the first session of our conference tomorrow, and it's 58 minutes. And if you're watching this, you can join Patreon. Any tier is going to get that video tomorrow. It's releasing at 7 o'clock p.m. Eastern. There's going to be 14 sessions total, one every Friday, starting the 6th of January all the way till the first week of April. But that first video talks about macro, and, you know, it's not looking good for 2023. And it looks like there's, you know, the S&P 500, most of the top analyst institutions think we're going to drop another 10, 20% on the S&P. So I'm not saying it's going to happen. I'm telling you what the macro is out there in the sentiment. So if that happens, you know, even today we saw a lot of these growth stocks go lower. You might see some of those, you know, cash burning type companies go much lower than you ever imagined. And it could be an opportunity longer term. So how about you, Stu? Anything that's on your watch list that not buying necessarily? We'll talk about buys here later. So stay tuned for the buys. But anything that's kind of on your hot list?
Just my usuals, you know, just watching for some good entries for Roblox right now is one I'm just watching. I'd like to, you know, it just seems to have that staying power. We chatted about it earlier, and I'd like to see it get back down to $20.
Yeah,
right in that area would be nice. Love to see Unity come down to 20. I added a few or whatever in the 26 ranges, and then what else was I checking out? Oh, yeah, for me is Chewy and Petco Wolf.
Yep.
So their earnings are solid. I mean, that to me is right in the lines of, quote, recession resilient companies. You know, so I looked at a lot of the subscription models, and especially with Bark, CEO, they're not upping their price on it if you're already a subscription member. If you're already receiving no monthly shipments, they're not increasing the price on you. New customers would pay a higher price. So I don't see people necessarily leaving. Maybe the growth will slow down on them, but you know, now would be the time to accumulate them.
Yeah.
So yeah, those would be the ones I'm checking out.
Metaverse and pets, love it. All right, cool.
Metaverse and pets, man. Games and friends.
Games and friends. What about you, Tony? What's on your watch list right now?
Mainly focusing on two cybersecurity company, which is CrowdStrike and Zscaler. It's something that, you know, within the internal team, we're talking about the whole, you know, cyber threat, you know, having those phishing, hacking, which is, you know, something that preoccupies for the business. So this is something that, you know, they're looking into it, we're testing on it, and we see a lot of like promising feature that they have. So, and with the stock price currently, it's really attractive. Another one that we use is Snowflake, and that's pretty much something that I don't see, you know, like a product that is dying. It's more the opposite. Like more and more companies migrating towards Snowflake. So I would say data consumption and the whole billing will keep increasing over time.
So you don't think SaaS companies are all going to go out of business like the market does?
No, well, even like they say, like the whole like SaaS business will go away. It's more like maybe the small businesses, but Snowflake cater more like the large enterprise, and large enterprise, like they have data nonstop coming and go. So at this point, like I don't worry too much about it. It's more how Wall Street will value the stock. That's
it's still really expensive. It's still over 15 EV NTM revenue, 15 times. You know, we've been saying, you know, don't be surprised if that thing's $75 someday. Doesn't mean that I'm not going to own it, but you know, thinking 5 and 10 years. Do you see any problems? You know, Snowflake's not software as a service recurring. It's more of that consumption base. Do you see slowdown in a recession with that consumption base, or what are your thoughts on that?
Maybe some bit of slowdown, but what we're seeing more within the developer community, it's more about optimization So back then, everyone was focusing on migrating all on-prem data into the cloud. And what happened is that after 1 years of services with them, they realized this huge cost. So now it's all about optimizing it so that you don't spend as much, but you still consume a lot more than before, because now you know how like you can save 50% of your cost from optimizing your code. And now you're like, oh, okay, well, we can do even more stuff. So we're putting even more data into it. So they're not really saving more money, but they're adding more data, which is it built that lock-in system. So it's really hard to like go out of the system, like people using Oracle system.
Yeah. Well, I mean, I worked in software as a service, software, and it kind of evolved into software as a service for over a decade. I still have a lot of friends that work in the industry: Salesforce, Amazon Web Services, Datadog. My wife works for a company called Guidewire, which is enterprise software as a service for property and casualty, PNC. So you think of like State Farm and all the Geico and all those big companies. They use that as their ERP backbone for all their claims. And that one's obviously going to be more resilient, I would think, just simply because you think of insurance companies are going to do well whether the market's good or bad or indifferent, or the economy, right? One thing I will say when I'm talking to the people that I know that work in the industry is that business it's still really busy, but more people are putting bigger projects on hold. So it's taking longer to close, but it's still very, very busy. You're seeing layoffs in Salesforce and, Amazon, which a lot of that wasn't Amazon Web Services, but you're seeing tech layoffs. But a lot of that is just extra trim or extra fat to trim, like middle management. Salesforce had tons, and they still have tons of middle management and just overlap, especially with the Slack acquisition. So you think of their real estate and how much office space they're not using post-pandemic, and all the extra hires they made during the pandemic. Business is slowing down some, but they also can just optimize and maximize, efficiency and profitability. And it sucks for the people losing jobs. But the message I want to deliver is that the people I talk to, business is still really strong. Of course, they can't share anything that's insider, but they can tell, hey, things are going pretty well here. And, some customers are pushing their deals a little bit longer. So it's very high level, but it gives you a little bit of a glimpse of what's going on in some of those software companies. I want to talk really quick about a couple market movers today that you might find interesting for the viewers. Silvergate Capital, this is ticker SI, and I'm going to share my screen here so I can show you the chart really quick on this. So here's SI stock. This is Silvergate Capital. This was down 42.73% today, down another 5% after hours. And so this is one of the market movers on the downside. Next, I'm going to share one on the upside. So shares of crypto-friendly bank Silvergate Capital tumbled. At this point, it was 43% in this article here, after it said digital asset deposits tumbled $8.1 billion from September 30th through the end of the year to just $3.8 billion amid a crisis of confidence in the sector following FTX collapse. The bank said it was focused to sell $5.2 billion in debt to cover withdrawals and recorded a $718 million loss in the fourth quarter. It seems like a pretty aggressive sell-off, but it makes sense with the sentiment right now. The other one I wanted to share, and I did a video on this, so if anybody's interested, it's only about a 4 or 5 minute video on Novacor stock. And this was up 68.45% today, up another 1% after hours at 120 a share. And you can see this is a 12.5 billion market cap. The reason it skyrocketed, basically, the huge jump came after the company announced the results from late-stage clinical study evaluating its tumor-treating fields, that's TT fields, therapy and treating stage 4 non-small cell lung cancer, that's NSCLC. And I kind of covered that in more detail and shared some information about the company and looked at a chart. So check that video out next when you're done with this if you're interested in Novacure. But those are a couple movers. So you guys obviously you guys were shorting, Silvergate Capital, and you bought MVCR yesterday before the pop, right? Everybody on here. So, just kidding. I know that there's some people in the community that own Novacor, and we don't ever really short anything in Fired Up Well, so it's not really our thing. We're more of long-term investors. So want to switch gears here and I don't want to spend a lot of time on this, Derek. I'm going to go ahead and unmute you here. I don't want to spend a lot of time on this just because we're going to do an EV session that's going to maybe cover some of this. I want to go into a little bit more detail, share some slides and stuff. But just from a high level, I wanted to talk about EVs and batteries. You know, it's really cold out, and I've got neighbors that own Teslas and other electric vehicles. And one of the problems that we've talked about in the community is that, you know, if your range is 400 miles, you might only get 50% range if it's, 10 below zero if you're in the Midwest. And so you recently bought a Tesla, and, not necessarily talking about the stock, but just EVs in general. You know, how has that been for you? I mean, you're using it just to drive to work. You're not necessarily doing 500-mile trips across country with it. But for your electric vehicle that you own, how has that experience been so far in the cold for you?
It's been great so far. Driving wise, we have the rear wheel drive Model 3, and it handles the snow fine. The weight distribution is very different from a regular vehicle or a truck or anything because obviously, as we know, your engine's in the front of the car, so there is no weight in the back. So it's easier for your tires to slip, but because the battery is in between the axles, your weight distribution is centered. Its center of gravity is, like the car just moves differently, in slippery conditions and stuff. And then also the traction control on the car is outstanding. I mean, it doesn't slip, much. But I will say that over Christmas we drove out to my mom's, which is like exactly like 100 miles away, and luckily between our house and my mom's, 60 miles into the trip, there's a town called Hinckley. If you're ever in Minnesota, it's got one of the biggest casinos or the most well-known casinos and stuff. But in Hinckley, there's 8 superchargers there. And we left our house at 269 miles, so we're at full charge. And by the time we got to Hinckley, we were at 100 and I think we were at like 119, and that was 60 miles. So we used 100 and 140 or 150 miles, whatever it was, 140 miles to go 60. And
so about 50%, that's what I typically hear.
Yeah. So, and then going home, I was able to plug it into like a regular, like your regular standard outlet or whatever. And but when we left, I think we were at 255 miles or whatever it was. And we made just drove straight home. And when we got home, we had like 50 miles left. So we used 200 miles to go 100 miles.
How cold was it approximately?
-5
Fahrenheit. Yeah.
Yep.
So when you get to those negative temperatures, the battery technology's just not there it's not practical for everybody. If you live in California and it's 60 degrees and above, or not that all of California is always 60 degrees, but you know what I'm saying.
I will say though, like at 30 degrees, like there's a little degradation, maybe like 10%. But yeah, it was very substantial when you got under zero. But like the last few days, it's been in the 30s, low to mid 30s here in Minnesota. And I mean, my typical trip to like work and back, I mean, it might only be like 20 miles less. Yeah. So it's really not that bad. It works
great for commuting to work and back and stuff, but if you're making long haul trips in the cold, it's not always practical. And like I always say too, if I've got little kids, like I can't stop and charge, even if it only takes 30 minutes, but if it's an hour charge and it's not a supercharger, like that's even in the summertime, it's not ideal. In the winter, there's places that I go to in Montana where if I run out of charge, like I'm SOL, I'm screwed. Like, and there's gas stations, but not necessarily charge stations. So I think it just gives an insight, especially for someone that's not from the United States, because I don't think people realize how big the U.S. and how rural some of the middle of that U.S. really still is. And there's just a long way to go in infrastructure. It's not saying that that won't happen with time or that EVs are necessarily bad, but it's, if you live in the Midwest, you almost still have to have both. And so what does that look like as we go forward? There's going to have to be advancements in that battery technology. And we're going to talk more about that on the EV session when we do that here in a few weeks in that Let's Get Fired Up conference. So again, guys, join that. Check out patreon.com/firedupwealth. Join us. There's a video that's going to be on tonight, Friday, January 6th, for that intro and macro. And then every Friday, we got a new video coming out. So I'm going to mute Derek and move over to Stuart. And Stuart, I know you wanted to talk a little bit about some, I think, NFTs and a few different things. So educate us on what's going on. What's up, man?
Yeah. All right. So as several in the community know, I play DraftKings Rainmakers, which is NFT cards, football-based. Instead of doing fantasy football with picking the names and all that stuff, you actually play your cards. And I've built up about 440 cards now, off and on. And the discussion has gone down now is what's going to happen tax time. And it's pretty easy in regular DFS. When you wager money that's gambling. So you put $1,000 in and you win $5,000, you $4,000 profit, you have to pay gambling taxes on that. NFT is a little bit interesting because it's a marketplace and DraftKings is not reporting or providing the marketplace sales, in a sense, is what I'm hearing. Nothing's set in stone yet. We'll know more when it comes up. It's kind of interesting. In the Discord, we call it Tax Tuesday, where that's the only day anybody can talk about taxes is on Tuesday. Any other time, because no one really has it set. But my take on it is that NFTs are going to be like a collectible. And so if it accumulates wealth, it's upon you, if you sell it and make a profit on it, that you have to report it to the IRS. If I sell a baseball card that I bought 10 years ago for $100, I sell it for $10,000 to a private collector, and it's a cash change or, whatever. It's upon me to report that to the IRS.
So, or is it going to be more like Bitcoin where, it's like digital real estate, that's taxed a lot differently.
Yeah. And this is where, there's a lot of guys in there that have a lot of money into it. We're talking guys that have dumped like 50 to 100 grand and no one has like a set answer. And so I don't know. I see it more being along the lines of a collectible. But the interesting part is it's a collectible that's used to gamble. So now,
right?
Yeah. So, right, I pay, I put $1,000 into Rainmakers. How am I deducting that necessarily on my taxes if I, say I had a winning, a substantial win. And how's that going to balance out? As my marketplace purchases, is that counter the winnings? And so right. I don't know. I'll find out come April. On the DF side, it's pretty straightforward. On the NFT side, because then the other part of it is now cards are becoming worth less because we're at the end of the season. Right. And also, so like Kyler Murray, just a rare card for him or an elite card was like a $400 or $500 card. And as soon as he blew his ACL, like everybody knew it, right? When that happened, we all you're watching that and you're like, yeah, it's ACL, non-contact injury. He's down. That price just plummeted. Well, what if you just bought that card for $500 and now it's only $100? Do I get to report that loss?
Sounds like Upstart.
Who knows, man? I don't know. It'll be fun. I'll learn as this goes. There's probably maybe people that know more than me in the NFT realm that might be able to say that. But at the same time, I don't think that that's really concrete and known yet exactly how all that's going to go down.
Interesting. So, that is really interesting stuff. Okay. What else is shaking? Video games. I think you talked earlier to me about video game sales and things like that. What's the outlook on that?
Yeah, so sales were down 4% in comparison to last year. Overall revenue was 4%, 4 to 5% average. And the interesting part with that was, though, is that daily active users was up. So we're seeing some of that ad revenue type stuff come through the pipeline.
Right.
Another little interesting part I was reading is that 40% of iOS users still choose to be tagged, you know what I'm saying, to be followed or whatever, or to have,
Yeah.
you know, their information out there. So that's still a substantial number
40%.
that's out there and, you know, available. It's not a desert. What else? You know, with Roblox and Unity, came down to, you know, the big thing for me is the daily active users, because that's still growing. And compared to COVID, when you listen to the earnings calls and you really dive into it, you see that COVID was definitely a blip, but the overall trajectory is unchanged. You know, it's still moving. It's just, you had this mountain just go boom, and then, you know, now we're coming down for that mountain, but if you zoom out, the whole thing's still climbing.
It's like semiconductors. We talk about semiconductors in the community. You know, it's a secular growth trend, like a lot of these trends, but it doesn't mean it's going to go in a straight line. There's going to be peaks and valleys in that as it climbs higher. So you zoom out 10 years, that trajectory is up, but it's not going to be in a straight line up. And we had a little bit of a spike. And with Wall Street wants to see earnings growth every single quarter, every single year. And so if you've got some pull through from COVID, then it takes time for those comps to kind of sort themselves out back to the norm. And I didn't mean to interrupt you there.
No, you're good. I'm just, it gives me a second to find out where exactly I was at. And you know, I mean, with some of this stuff, I mean, you know, AppLovin still wanted to purchase Unity for $58 a share. So you look at something like Unity, it's getting beat down. Like, people with a lot of money still wanted to buy this thing. It's not as if Unity is going to go out of business tomorrow. I mean, they're massive in the mobile realm. I'll digress into this. I don't know if anybody's heard of Marvel Snap at all. That came out a few months ago. They talked about it in earnings, and it's got 8 million downloads right now. I think it's top 3. The interesting part about Marvel Snap was...
What's Marvel Snap?
It's a card game for Marvel, basically. So you ever play those card games where you have to battle someone with cards?
But not on Snapchat, just like that's what it's called.
Right, they're going off the Snap, right?
Yeah.
Yeah, there you go, Marvel Snap. So, you get me with, now you're going to get me to say the name, and of course I'm going to space it, but the Gauntlet, the Infinity Gauntlet. There you go, the Snap. The interesting part about that is that they got a lot of flack for the Iron Source purchase and, you know, spam, all this stuff that, you know, was from over like a long, long time ago.
Malware and
Yes, and so you saw the clicking of the bait, and then of course everybody would hone in on these different developers that would come out and say Unity sold our souls and all this other stuff, and no one's going to use them. And then John Riccicelli put his foot in his mouth and said, you know, I mean, he knew it. Just don't talk, dude. And but he did, and you know, said that anybody doesn't want to monetize a game is an idiot. Well, it was taken out of context a little bit. At the same time, he was ignorant to say that. Here's the thing about Marvel Snap is that all the reviews are 8 out of 10, 5 out of 5, 9 out of 10, and the monetization of it is getting accolades. Like, people love the fact that it is how they're doing the monetization in this game. You can have all the cards, but they're allowing the variants of the cards to be purchased separately. You can still earn through game. I was just pouring, you know, the last minute here, just going through different reviews of it, and that it's so for me, this is, you know, built on Unity, Union Gaming Services, and Marvel Snap, and the monetization of it is not being destroyed. You know, John was part of the whole loot box. I mean, that was his big deal with EA. So, and Mass Effect.
I think we need to make a Pokemon Snap. What do you guys think? We'll be rich.
Yeah. Good luck with the licensing.
Yeah, right.
But that's that's another game that's just massive too. And that was the other part that came out without any. If you look at this past year, there was no real. Well, you had Ragnarok. Why are the names just Dark Souls creators and I played the game and now it's missing. I always space these names at the last second here, but you didn't really have these big titles come out. You had Modern Warfare 2, and yet it still kept pace pretty solid, the overall trajectory. So in essence, I'm not worried. What I like to hear is when Unity is talking about positioning themselves for the macro environment and when that becomes positive. And so investing in Unity for me, I could see this next earnings being just could kill the stock price. But it's not overall. I'm not worried about Unity going out of business.
Yeah.
I'm not worried about it with Iron Source and how deep they are into mobile gaming and how mobile gaming is evolving into more, peer PvP style. It's not so isolated per phone. And so I'm not worried about it. Not really. Not unless leadership could screw things up. But overall, if they're doing what they're saying they're doing, coming about it, then they're positioning themselves. And I still am big into Unity for the create side and for the digital twin.
Here's what Unity says about Iron Source. So with Iron Source, we become the leading end-to-end platform in the market, supporting the developer throughout the entire development lifecycle, from opening a project in Unity Editor all the way through making it a successful business and supporting the data science behind that. As such, we are positioned to lead the market and be the main beneficiaries of a market recovery. While market conditions are challenging, we have a unique opportunity to gain market share and invest in positioning ourselves to grow rapidly once macro conditions improve. Our end-to-end platform will be a critical enabler in helping creators thrive even in a challenging market by enabling more game creators to build successful businesses. Ultimately, we'll be growing our overall market, and there's a lot more than that, but kind of gives you an idea of what their thought process is with Iron Source. And we'll see how that kind of plays out, but it seems to make sense. And I was playing some games with my kids over Christmas, and every game said powered by Unity, So
in the mobile area, it
wasn't even mobile.
That's their realm.
It was PlayStation 4, but it was, just not like big titles, but like carnival games and things like that. I have young kids, but all those games were Unity games, even on PS4. So I thought that was interesting.
So, yeah, and when you look at Unity, it's similar, like Roblox is already end-to-end, right? So if you develop a game on Roblox, you monetize on Roblox, paid through, everything's on the Roblox platform, their servers, all that other stuff. Unity is now evolving into that with the Iron Source acquisition. And I think you can see where AppLovin was sitting there going, wait a second, we can get really into this market of mobile. Like look where they're at, look what we could do as a partnership. And I think you saw the big investor said $58 isn't enough. Seems like a lot right now, but if they're looking long term on their investments, they're thinking 5-10 years executed properly, and it's more than a $58 share. So
right, yeah, absolutely, good stuff, man. I appreciate it.
Yeah,
Tony C. So I just unmuted Tony C. We talked a little bit earlier about software as a service and cybersecurity, and I was going to ask you this, and I didn't, so I want to circle back, and it's a good segue. What are your thoughts on Palo Alto Networks? It's one of my top watch list stocks. It's now in the 130s, which is attractive. I always said wait for it under 140. I'm hoping to get it closer to 120. Don't know if that'll happen or not. Certainly could. It's still expensive. What are your thoughts on a Palo Alto? You talked about Zscaler and CrowdStrike. What are your thoughts on a Palo Alto Networks? Do you have any experience there or thoughts?
Not really. I know that within another team in the cybersecurity, they're looking into it, and they're assessing the need of using Palo Alto. For now, we're using CrowdStrike and Zscaler because it's like what's been vetted and worked through our due diligence, and it fit within our criteria. But Palo Alto, I'm not sure if it's if we're in the middle of the selection with them or not. So I can't give more information regarding that.
But they wouldn't really compete. There'd be like overlap there. I mean, you think of CrowdStrike endpoint security, so there's different layers of the onion there too. So you definitely could own all those and have one ecosystem depending on the size of the organization. Would you agree with that?
Yeah, and that's that's something like depending on some people think that they compete between each other. Even like within the SaaS tool, they think like, oh, one has to dominate all, but reality is that at a certain point, an enterprise will need multiple SaaS tool, multiple cybersecurity tool in order to like cover the whole end-to-end solution for them. So that's a big challenge that any business, even where I work currently, is assessing the tool and seeing which product feature fit the need of the company. So back then you only have you have to figure out how to secure your on-prem solution. And now since on-prem it's less relevant and you have customers and employee across the globe, you're like, okay, well, how do I make sure that whenever they're connected online, offline, or in Asia and Europe, like they're secured. VPN is not just enough. You need more than that.
Yeah, absolutely. Okay, that sounds good. And business from your perspective has been pretty steady on the project you're working on, or how's things been going with them?
Like you mentioned, it's busy. I have to admit that, they did mention about this whole, because where I work is a pension fund, so we are aware of like certain market risk that we hear and everything, but we don't get like secret information, right? We get the same information as the public market. So at a certain point, they're like, well, buckle up because, it can get, quite interesting with the whole interest rate going up and everything. But it doesn't mean that, the budget they'll start cutting budget or freeze too much, because at a certain point, the whole IT project, it's something that they consider transformational, so they need it in order to be innovative into the business. And that is something like you cannot discard. It's not like, thing got expensive. It's not like gas went super high and we're like, okay, we're driving less. It's not the case. This is more like, transitioning toward like having like an EV car.
Yeah. No, that makes sense. So lightning round, I'm going to do something here really quick. This is going to be fun. Everybody is unmuted. So I'm going to go around really quick and I'm going to give you an option, and I don't want you to think too hard on it. I want you to give me an answer right away. You got to pick a stock, which one you would rather own in your portfolio. So Derek, Rivian or Lucid, which one would you pick over the other? Not necessarily stock price, just which one do you think has a better long-term perspective if you were to buy it?
This is kind of going to be the opposite of what's going on with my portfolio right now, but I would rather own Rivian than Lucid, even though I own Lucid right now.
Oh, you do own Lucid. Okay. What'd you buy it at?
I started at 8. I think my basis on it right now is like 7 something.
Okay.
I think I have like 20 shares or something.
Why would you rather have Rivian than Lucid?
I know they both have their issues, and I know Rivian's is a little bit more glaring than Lucid's, but I think if Rivian makes the right choices, makes the right business choices, I think that they have that. Like you can't discredit that partnership with Amazon.
Yeah.
If now, as much as that is their biggest catalyst, I also think that can be their biggest downfall, because if they take too long, and Amazon's like, you know what, we're going to go somewhere else. I mean, that's 20%. They own 20% of the company.
Or if Amazon rushes them.
18%.
Yeah.
Yeah, that's true.
I think between the two, I think Rivian's got to tweak their business model a little bit. I think they need to maybe cut the R1T and the R1S just for a little while, put them on the back burner, and focus only on Amazon's delivery vans. And I think Rivian would be. Lucid to me is it's too niche, and your price points and stuff for vehicles, especially going into a potential market that we're about to see or could see.
Yeah, but that market also has more insulation because, you know what I mean? Like, It certainly will be impacted, but the higher end consumer generally is less impacted in a recession too.
Yeah, but I mean, I would say too. I mean, does Lucid have the capability of knocking off Bentley, Rolls Royce? I mean these. I mean,
Yeah.
I get the EV part. And I mean, me personally, I would rather have an EV, but is Lucid really the answer to take down these? We're not talking about just luxury vehicles. We're talking like the
Big
tippy
time, yeah.
top.
Right.
No,
Yeah.
McLarens and Lamborghinis and stuff like that.
Yeah.
Well, even
right.
that's a different market though.
Yeah. All right. Perfect. Lightning round. Stuart, you had to own one. I know you own both, but if you had to pick one between Unity and Roblox, which one?
As it stands right now, I'll go with Unity.
Why?
Digital twins, industrial. They create side and its growth rate, which is
More use
54%
cases.
year over year.
Yeah.
54% year over year. And that growth rate and, it just, digital twins is where it's going to be at for everybody. I mean,
So
everybody can have, it's just there.
More use cases. Chewy and Bark, which one?
Oh, man. Two different reasons. Probably have to stick with Chewy just because of the size of it.
Yeah.
Bark could still go back private or something along those lines. I mean, heck, dude, Chewy could probably come in and buy Bark. Who knows?
Bitcoin or Ethereum?
Neither. Ethereum.
Mana.
Shiba
Actually,
Inu.
XRP, use case, XLM. I just like the idea of the transactional. As they don't use much energy. It's minimal energy. So, anyways, Ethereum. There you go.
Okay. Last one. DraftKings or Penn National Gaming?
Dude, neither. DraftKings, I guess. DraftKings because I'm playing DraftKings, but I'll be honest, man, that having dived into this deep, that's gonna be real hard for him, man. I do. So
Yeah. I'd go with Penn. Brick and mortar.
probably Penn. I think their algo and stuff like that's better, if I remember right when I was reading beforehand.
They have the ecosystem with brick and mortar. With DraftKings, with Golden Nugget, there's some collaboration there, but I like both of them. I think there's probably more risk reward on DraftKings, but
but DraftKings could also fold.
yeah, that's true. Yeah,
I mean, they could.
yeah.
I mean,
and MGM and Caesars and everybody's competing in that space now too. So,
Yeah.
Tony, CrowdStrike or Zscaler? Which one? If you had to pick one only.
Ooh, tough choice. Probably CrowdStrike at this point.
Why?
I would say more on the innovation side. They have more. I would see more growth toward CrowdStrike instead of Zscaler at this point.
Is CrowdStrike a buy under $100 a share?
For your first level, yeah. I mean, for a starter position, then you'd have to, you'd have to join the community to look at the next level that Eric's saying on Wednesday.
All right, McDonald's or IBM?
Well, I mean, I'll go for McDonald's at this point,
IBM's cheap though right now, right? It's like
cheap too, yeah.
100 P ratio. Yeah.
100 P ratio. It's insane.
How is that possible right now?
Because it's got a 4.6% dividend yield, man.
I know, but seriously though, man, how can you in one mouth on? Oh,
Is it
man,
a-
everybody
is it-
listening to this? Next time you tune in, they're having those roundtables and they're talking about valuations and stuff like that. Seriously, and they pump IBM. Just
I mean, is
Okay.
it an error on Google or something? Because it doesn't seem like
it has to be an error. I can't. Are they really at a 30? You said it was a 35.
No, like 100 something.
No,
Holy, that's-
you go to FinViz is 87, so either way it's overvalued, right? For
Well,
a value
just a
price.
quick
not
Google,
under 10.
It says 102.86 on Google, and I'm not saying it's right, but either way, it's not a 10 PE.
No.
And people are dogging on Tesla at a 30 PE,
35.
22
or what?
Ford PE. McDonald's is a 27 and Costco is a 35 or whatever it is. Like, I don't know. I like to own a bucket of diverse stocks, but I'm not sure about IBM at this price. So, What were you going to say,
I'm
Stu?
sorry. I'm just perplexed by that one. I am. And I mean, I liked IBM stock at one point in time. I owned it. Okay.
Apple or Microsoft, Tony?
It'd be more Microsoft, mostly with the new discussion that they want to integrate ChatGPT into it. It looked very interesting.
Yeah.
I'm just intrigued of how they would make revenue through it. Like depending of the AI result, it'll give you maybe the right product. That would be interesting.
The only reason I brought it up is because I knew you'd pick Microsoft and you would talk about that. So wanted to make sure it was included. So what I'd like to do now is go back around the room and I'd like to talk about stocks that you have been buying, other than the one stock. So I'm going to go up to Derek. Have you been buying anything like any spec stocks or growth stocks or just any stocks? What have you been adding the last week or so?
Other than my number one, I have added to CrowdStrike, which is now my second highest holding. I was going with CrowdStrike and Snowflake when they were both really down. But after they ran, Snowflake is coming back like way slower. I've also added to Rocket Lab and Planet.
Not Planet 13, but Planet Space Stock.
Yeah, sorry. Planet Labs. And then I have also been adding to Black Sky. I've been adding to the space.
Yeah.
The space sector and stuff because I mean the whole sector is just it's down pretty far right now.
Yeah. We'll talk more about that, and we're covering space stocks in that conference too. So if you want to see an hour video just on space stocks, definitely join us for that. Patreon.com/Fired Up Wealth. You know what it is. There's a link in the description, probably in the comments as well. Today, actually, from the community perspective, I think I saw a lot of United Healthcare and CrowdStrike. So very diverse. People have been buying kind of a blend of some dividend stocks and some growth stocks. I think a lot of people get the misconception that, that we're only buying hyper growth or spec or stuff like that. And that's not really the case, So what about you, Stu? Are you buying anything right now? What have you been adding?
I added some Unity today. And I added some Confluent for sure. That got close to its 52-week low. I'll go into a holding pattern on it for a little bit. Added a few shares of Path, and I actually added Crowd. So that was one that I waited to dip. I wanted to see it below 100, and so I added it. And I over the last couple weeks, dipped into Rocket Lab and Planet and Black Sky. I mean, I'm just adding those. It's like a monthly deal with me. Like it is because I don't care if it goes to my kids in 20 years. I mean, the fact is, like, just look at it.
Oh, would you look at that?
Yeah, well.
Would you look at that?
Yeah, there's a few more blemishes on the car.
Oh my gosh, just look at it.
Like,
just look at it.
These things are going to be bangers, and a couple of them might die. I get it, but I don't see Rocket Lab dying. And this is one of those that I really feel like in 10 years I'm going to look back and say, I'm glad I got 500-600 shares of Rocket Lab built up over a year or two.
Did you guys see the private valuation for SpaceX recently?
Insane, probably. That's Elon's ticket for whatever problems. Just take it public and get rid of it, and then go to an island somewhere. So yeah, those, and then watching Chewy and I'm watching that one. I'd like to see that dip to that 30 or below 30 range. It'd be real nice to see that happen again and latch on to some more of those. So, and that's not the only things. Like you just said, I think some people think this is just my taxable account. So, my retirement account and stuff like that is completely different through work.
Sure.
And so this is just tech and growth heavy.
Right. Yeah. Tony, how about you? Any buys?
Not much. Recently, CrowdStrike and Datadog because they've really hit that almost new low, I would say. Well, CrowdStrike's new low, Datadog sort of new low today. I bought it yesterday.
Yeah.
I want to buy Microsoft, but I'll wait around 216, roughly near the previous low.
Yeah.
Pretty nice.
Yeah, it'd be a nice add-on to it.
Yep.
Like UNH was an interesting one, but I need to do more research into this, so because I'm not too familiar about it. So it'd be a nice, more like a dividend growth.
Yeah, it's a recession play, and you know what I mean. It's health plans, so it's always kind of be there. But when there's a cycle, the stock probably won't be propped up as much as it is now, maybe as well too. So I got one more lightning round for everybody. Put you on the spot in front of a national audience because that's what I do. One of these days we'll have someone else host, and you guys can ask me all the hard questions.
I got a list, man. I've been saving them.
So if enough people watch on YouTube and actually give some support to this video, maybe we'll do that next time.
If we can get 100 likes, ask Eric a bunch of hard questions.
We'll get 100 likes just from our base. We need a lot more than 100. We need to have like 500, and then I'd consider it.
Okay.
The top 10 video I just did is approaching 10,000 views, so that's starting to get some good traction. It's been slow. Retail has kind of left the building, and you always get people coming to the market in January. It's kind of like gym memberships. Everybody's excited, and a lot of that always fizzles out. But the excitement's much lower this year than it was last year because the market's not fun when it's not going up every day, and most retail don't have the psychology and the education, which is why the community is so important. So go ahead.
Real quick on that, on what you just said right there for anybody that listens to this, like I have friends that were talking about Rocket Lab a year and a half ago. What exactly has changed a year and a half ago to now besides the price? Like now's when you should be like excited to buy it. If you liked it a year ago, and we'll cut it off there, but I'm just saying that's just an example. Like
sentiment's powerful, man. Yeah.
It's just amazing to me. Like I don't see nothing in their story has changed for me. Nothing. In fact, it's just gotten stronger. That, like I said, small case example.
It's
so,
your
go
wallet.
ahead with your lightning round, mate.
Yeah, your wallet. Your
wallet shrunk.
So what I'm going to ask you, and I'm going to give you an opportunity to think. So I'm giving you a little bit of time here. Is I'm going to ask each of you where you think the S&P 500 is going to close at the end of the year. No one's going to hold you against it. Nothing. We're not going to hold it against you if you're wrong. But before I do that, one thing I wanted to do is there's a newer member of the community. His name is Matt S. And he was a Motley Fool subscriber for a while. And basically he joined the community on an Elite, really liked it. He upgraded to Platinum. He did the annual membership, which if you do that before the 10th of January, Platinum's going to go away. We're not going to have that anymore. It's going to be members like this that I trust, that we've worked together for a while. I want to close that part of the community down because when the market turns, you're going to get a lot of people that come into the community, and some of them will be more traders, and we need to have a solid base. But if you join the annual membership, you get 10% off, and you get 2 free 1-hour mentoring calls with me. So it's a great deal. It's usually they're $150 a call. We had one the other day, actually yesterday. It was we talked for 90 minutes. It's usually supposed to be 60 minutes. And he talked about how he joined Fired Up Wealth as kind of a complement to the Motley Fool, because Motley Fool does a good job of giving picks, but he wanted to be able to take it to the next level and have a community. And so I think what would be helpful, and he brought this idea up in the Platinum chat, and said, I was looking for ideas for YouTube, and he said you should create a series or a video that talks about why a community would be valuable. So if someone's watching and they're like, hey, man, I'm on an island investing by myself. It'd really be good to have a community. I can tell people till I'm blue in the face, like, join our Discord, but people just think that I'm just doing it to try to make $1 off them, and that's not the case. And so the only way I can really kind of, quote unquote, sell that idea to somebody listening is probably hearing it from somebody else and not from me. So starting with Derek, you've been with us, one of the first people that signed up, and you've been a VIP the whole time. Derek just won MVP for the community for 2022, and I'm going to go meet him face to face and take him out on the town and have a good time as kind of a reward. But if you were to say something to anybody listening about why you joined in the first place and what you think the community can bring, the value add it can bring to a long-term investor, what would you say to them?
Well, it's actually for the exact reason that you just mentioned, because I was trying to day trade early on when I started back in March of 2020, and by July I was already starting to lose, and I subscribed to your YouTube channel. I think it was like April after I started, and then I joined your thing, the Discord, because I was like, you know what, I'm gonna give this a shot. If this doesn't work, then I'm probably just not cut out for this. And you know, I know in the beginning I wasn't exactly easy, but yeah, I mean, and Tony, you were a part of that as well. That helped me out a lot too. You know, that first 6 months or after I joined. But it's been the best decision that I've made financially, I think, ever for myself, because now I can look at a market and not panic. You know, and because if you have that long-term horizon view mindset, you know, you can go into a market like this, even though it sucks. I mean, I'm not saying this doesn't suck, but you have a completely different way of viewing it and creating a game plan around it and to attack it, as opposed to, you know, running away from it, I guess.
Yeah, and
so
being by yourself is hard. I mean, that's how I did it for years, and I wish I had something like what we've built. And I always tell people, like, the community was, you know, my idea, but, you know, I had help with that idea too. There's even people in the beginning that helped with the idea of Discord. You think of YMCMB, and, you know, there was definitely a lot of people that contributed to the community to make it a success. So it's a community. It's not just Eric telling people what to do. It's like a bunch of people bouncing ideas, looking at stocks. We've got different channels for personal finance, you know, talk about retirement strategies, talk about sports. We talk about, you know, not just the stock market all day, but really everything. Movies, you know, we have a lot of fun in there, and it's a place you can go. It's a safe haven where you can go and kind of anytime, you know, 24/7, 365, Christmas Day, and talk to somebody. So it's a social thing too. And it's a social thing with people that have similar goals and mentalities. And it helps keep you grounded in times like this, to know that you're not alone, that there's other people that share the same beliefs as long-term investors. And there's not a lot of places you can find that. If you go on Twitter or social media, it's a trader's paradise, and it can be really hard as a long-term investor. You get influenced negatively all the time. And I've been through this, you know, several times. I've been investing close to 25 years. So anyway, not to be long-winded, how about you, Stu? Anything that you would say to anybody listening about when you join the community, why you think it might be of value to somebody that needs a community?
Well, you know, I was writing a few things down here. One of the things would be is if you've made it through the video this far, this, if you want to call it a plug, was not at the beginning of the video. So that's kind of it. Like, you take the information given in this video as whatever you want it to be, but it was free and it's there. And I don't know, there's just a lot. This is just like a small, like, microcosm of like what we talk about. And it just, there's just a group of people that have been together now. I mean, I'm going to be 2 years now, and you know, you just get a feel for who responds, and you know, I don't know. I just think it's kind of cool because there's just not a lot of negativity. There's really actually no negativity.
Yeah.
You know, there just isn't. And I like that a lot. And I think we can't control the macro environment, but you know, Fired Up Wealth just provides a space where, you know, like-minded long-term investors can come together. We got so many different people in different countries, different industries. It's just, It's great.
Retired
like
people,
listening,
new investors, everything in between. It's,
yeah,
yeah.
it's just listening to Tony talk even about this stuff. I mean, I pay close attention to when he speaks because, I mean, he's in this industry, and so it matters to me what he says. I don't get that from reading opinion articles. So, I mean, those aren't even a grain of salt, opinion articles. So
Right.
I just
handful
dump
of salt.
those. And, when you're trying to outperform the market and you're trying to build wealth, it's a tough job. It's not easy. This is not something that's, I mean, I'm getting punched in the gut at times. And it's just helpful to have a group of people that aren't going to sit there and just punch you in the gut and call you stupid because you did something that maybe it was stupid. I don't know, but
Yeah, we'll find out.
I'm not going to call you stupid. I'm going to say, hey, all right, let's find out where we digressed at and stuff. And so,
and it's not herd mentality. There's a lot of different, we have James that writes for Seeking Alpha, and he's value invested.
James is a gold
ratio,
mine.
But it's the point there is there's so many different types of people in investing styles. It's not just all hyper growth or everybody buying the same stock. There's people that are bullish on some stocks and not others, and there's all kinds of ideas, and nobody is like hating on somebody else for liking an idea or liking a stock,
No, and James is a good example of someone in the community. I mean, really, if you ask him a question or you ask him something, he's gonna respond. Like he will
thoroughly too. Like he'll look
thoroughly
into
respond.
it deeply.
And you'll learn something from his response. That's not saying you don't learn it from anybody else in here. Or if you ask Eric a question, if you ask Tony a question or Derek a question, that's not it. I'm just saying the guy's like very detailed, and I mean it's just another part of what we have. It's a big positive. So what up, James?
Yeah. So anybody listening, I started the YouTube channel by myself in May of 2019. We started the Discord with a small group of people in June or July of 2020. And so, I mean, we're going on, quite a while now, May 2019 and July 2020. So you get in that Discord, you can use the search tool, and you can mine data that goes all the way back to July 2020 through the whole pandemic and the whole shebang. And some crazy stuff there you'll probably find. It's all there. Full transparency. All the mistakes are there. All the good things are there. All the bad things are there. It's all there. We're not deleting stuff we don't want people to see later or anything like that. It's there. So how about you, Tony? Anything to add? You're the first patron ever. So he's got his own Discord tag, and he was the very person to sign up. And he actually signed up for VIP. It was really surprising. Like the first person, I had 5 tiers, and this guy, I'm like, who's this guy? Tony C, VIP. I'm like, sweet. So first patron ever. What have you learned from the community? Has it been valuable? Obviously you're still here, so you think that, but what are your thoughts? What could you share with somebody listening?
I would say it's very similar to what Derek and Stu mentioned about the whole community aspect. It's right now it's so diverse compared to when we first had first in early 2020, because early 2020 we were more following a bit the herd. We were following okay, what Eric's doing, we'll just follow because no one knew what to do, right? Early pandemic, and we're okay, well, he's the veteran, he knows his stuff, so let's just follow it. But with time, you learn and discover how to really look into the fundamental, look at the different type of investor. When I discovered James, he was very a value investor. He was a lot into the oils, and I was like, what the heck is it? I don't invest in oil. And he recently sold some of them in 2022, which was a big reward for holding it. So.
But he's also buying Zscaler now, so we've turned to the dark side.
But at the same time, it's for him, I'd see it's a good move because he has this, investment journey ahead of him, right? He has a lot of experience, so he can see. I think he can see ahead of most of us, which are probably less experienced. He's been in the field for 15 years, something like that, investing. So. For him, is another 5 years, it's a piece of cake. He can see that probably Zscaler will worth more than that. So the community-wise, it's a very good place, mostly for people that either got burned, they don't know what to do. either they trade so much they burn the account, or they just like, they go to Wall Street bet and, they follow the wrong people. Going to the community and having Eric and the other really help you keep grounded and tune out the noise. That's the most important part, because you can open Twitter and everyone will say, oh yeah, go buy this, go buy that, and they only share you like the win and not the loss, like Eric mentioned. So this is somehow like discouraging. Or they'll retweet 9 months later saying like, oh, I told you about this and everything, and you're like, well, you said this 9 months ago, but between that 9 months you screwed up the whole thing. So like, how can I trust you?
Right. Yeah, no, that makes sense. No, I appreciate that. So, but yeah, anybody listening, check it out. And, the nice thing, you can do month to month. And if it's not for you, not much of investment to risk, really, to join for a month and see if it works for you. Join the Discord and the Patreon community. So to finish up, guys, I want to start with Derek. Where is the S&P 500 going to finish on December 31st, 2023? We're at 3,800 right now or so.
Well, I think it's going to go down first. How
far down?
Oh, man. Well, before we started, we talked about that 20% dip, so that'd be down to, I think, just under 3,100 or something like that. So maybe around there, 31, 32. I think the first half of this year is going to be tough. I think the second half we can maybe see, some improvement. So to answer your question, I think we end about where we're at now, maybe closer to 4,000. Hopefully.
I like the answer. Stu, what do you got, man? Come on, I want the guru, right? You got to nail it. Nail it to the exact decimal point, and I'll buy you
I'll go
a beer.
I'll say that it ends. Man, thinking about this, and there's just like macro crap going through my head quickly, like 3525.24.
Why don't you call Tom Lee and see what he says? Maybe we get to 5,200.
And people probably, if you're listening still, you're like, well, why are you buying? It's like, because I don't know if it's going to, listen to me. Like, you could have a ceasefire happen with Russia and Ukraine. We've already had basically no hard winter in Europe. So gas usage has not been there like was feared. Like, there's a lot of things that can just change this. And it's moving.
And that video tomorrow is it's going to blow you away how much data is in that 58 minutes of macro. But anyway, sorry.
Yeah. And in my industry, we talked about backlogs, and, like, you see some companies reporting backlogs and they're like, man, we've got this big backlog. And in my asphalt industry, as my partner at work is like, yeah, it's because they can't build anything yet because we don't have the material. We don't have the parts. We're still facing big time shortages. It's real. Drives, everything. So
5,700 is what your number was?
Yeah. See, I digressed into a whole spiel, but I'm going with 55.25. 55.20. 35.25, not 55.25. 55.25. We're all meeting in Vegas.
55.25.
Hey, we're all meeting in Vegas. We're going. We're on.
Yeah.
Back to all-time
Lots of
highs.
happy people.
So 35.25. I don't like that answer. Screw you. Anyway.
Yeah, no.
Yeah,
Fine
55.25 sounds way better.
So, see if I'm wrong. You guys can tell me I'm wrong.
He's shorting the market is what he's doing, and he's just trying to pump his agenda.
Yeah,
So
we're
incognito
on to
this
you,
whole
Stu.
time, man. I'm hiding. I've been short. I don't
Damn
long
it,
term
Stu.
invest. I just short.
This whole time he's been short and bark, and he's a millionaire now. He's
There ain't nothing left to short, man.
short that
It's a
blend.
$1.68. What do you? I get percentages, but damn, like, come on.
Short blend. It's $1 a share. Open door. Let's short it. Yeah. Like, okay. I saw somebody the other day shorting Wingstop. I'm like, well, maybe. Anyway.
Well, I'd short IBM.
I've never shorted a stock in my entire career. And people are always like, why? And I'm like,
I'm still baffled by that. You got to make a video and ask people, like, just say, hey, in the comments section, tell me, do you think that IBM's a value stock right now? I'd just be curious.
yeah.
Like, really, how much are people paying attention to this, or they just listen, because I didn't even know that about it until Tony brought it up. So it kind of blows me away.
Cutting edge cloud, man. Next gen technology.
It could be if they were marketed right.
It's a dinosaur that it's like old boys club. You can't change it. That's
I know, it's too bad.
And Oracle is similar, but Oracle has much more upside, than IBM, in my opinion. I was bullish on IBM at one point when they got the new CEO, but nothing really changed, and the company's so old, it's hard to. It's like a tanker ship heading towards an iceberg, the Titanic. You can't just turn around, and it's
crazy how much their fingerprints on everything, though. Like when you really dive into it, how much IBM is like their tentacles.
Oh yeah, and they have a zillion patents, but they have patents of patents for fun, and they don't really monetize them, or do anything with them. So it's like, I don't know. Maybe they'll change that someday, but it's been the same story for, it feels like decades. It's been 10 years of the same BS. Tony, how about you? S&P 500, December 31st, 2023. Where are we going to close?
Ooh. I don't know. I was just looking at some charts and I'm like, worst case, 3,100, something like that.
For the year?
Close for the year, I would say probably like 34, I would say. Because I want to accumulate more shares, so I'm more like bearish for now.
He's shorting the market too.
I don't know how to short, but
listen to these guys.
Just buy more.
That's what you want everybody to believe. We all get it, guys.
It's the nerf mentality, bro. I mean, like I'd much rather be surprised. Like, at this point, I'm just grind it out.
So did you hear what he just said? He said he wants it to go lower because he wants to accumulate. I know. That's the mentality of a long-term investor. The problem with me is I've already accumulated a lot of wealth, and most people in my situation would be in capital preservation mode, but I'm still in my early 40s, and I'm not really worried about it. I think there's a lot of secular growth trends that you can capitalize on for the next 5 or 10 years. I'm not Kathy Wood or anything, but I certainly think there's areas where you can make money. You guys interested in my take on that? I'm not sure if I should even say it on YouTube because I'll probably get crucified, but you interested in what my thought is on the market for 2023?
Sure.
Oh, yeah, I am now.
I mean, I guess.
Short everything, short it to zero, short it. So I kind of share a little bit of this in the macro video that we're doing tomorrow. And again, if anybody watching wants to watch that, check out patreon.com/firedupwealth. It'll be 14 videos in 14 weeks. So you're talking about, 15 plus hours of content over this Q1. It's going to be really good information, even higher quality than this, edited, slides, demonstrations, things like that. The reality is that we don't really know. And the problem when you read Bank of America forecasts and stuff, they don't really know either. And what I talk about in that video that comes out tomorrow is that we're in an unprecedented time. You can't measure this time to anything in history. There was not a pandemic that we can look at where we had a bear market and we had inflation and we raised interest rates faster in this period than any other time in recent history. Even faster than the dot-com bubble, we raised rates. And I show a graph tomorrow where it's like, here's 2022, how fast we raised rates from basically zero. The Fed funds rate, 4.5% is probably going to be 5.25 next year. But what if inflation continues to go down? And what if all of a sudden the Fed has told us the Fed's not going to, the pivot bros, they call them, right? Pivot bros, like, oh, bro, we're going to pivot. So in November, when the market rallied, pivot bros were like, hey, CPI inflation's gone down a little bit. So now the Fed's going to, in 2023, they're going to pause and they're going to reverse and start lowering rates. Well, what happened is Jerome Powell came on and basically squashed that idea, very hawkish, and said that's not going to happen. And then we gave all, what was I telling you guys? Don't chase this. Don't chase this. Bear market rally. All of it came back. A lot of the growth stocks even lower, new lows. A lot of the names we've talked about even on this video today. So there's a chance that we actually could just trade in a range for a while. Right now, I think the market wants to see earnings, and I think earnings are going to be more important than ever. I think the macro, of course, is going to be very important, but we have more information about the macro right now than we did at the end of 2021, early 2022. And 2022 gave us a lot of surprises that we didn't know were going to happen, like Russia, Ukraine, and energy crisis in UK and Europe. And you can go on all the things that have happened. Most are going to tell you that the world, the global economy is going into a mild recession in 2023, but that it'll be short-lived. And so if you were trying to give a thesis of what will happen with the S&P 500, I think that a lot of people would agree with Derek that you probably will have some lower lows in the market. I've been telling you guys for 6 months now, expect lower lows. If it doesn't happen, consider it a bonus. And I say it every damn day on chart day. I tell you on every stock, expect lower lows. It's probably going to happen. And I give you charts that show, CrowdStrike at $70 and $80 in the charts and say, this is what could happen. And this is why. And on the macro video tomorrow, I talk about treasury yields and how that impacts everything. Interest rates are going to go higher. If they go to 5.25, treasury yields are going to go higher. It's going to compress. It's going to put more pressure on stocks like SaaS stocks. Now, the question is how much has the market already baked it in? The market's forward looking. The market already knows the Fed, because the Fed told us in November that they're going to raise rates by X amount and that the Fed's fund rate is going to be 5.25, maybe even 5.5. So is that baked in or not? And most of the bears would tell you no. If you look at historical P multiples in the S&P, we have to have maybe another 10, 15, 20% sell-off from that to get to a median for the situation we're in. And then the question is what does the E look like in that PE? Is that E going to compress? In other words, are earnings going to come in lighter than expected? And now the PE ratio is even higher. So if it's 4%, 4 points higher than the median of 14 or whatever it is in a bear market, and all of a sudden the earnings compress, well, then that puts us in a bad spot. Well, what happens if earnings come in and beat expectations? And what happens if we actually have more GDP growth than expected? The market could rally. But most people will tell you, if they're trying to predict and be on the safe side, that you're going to have more pressure in 2023. And I think most people would agree with Derek's thesis that you're probably going to see new lows in the markets, but the second half might look better because the market's forward looking and they might start looking at 2024. The other thing is the Fed, if they truly rely on data, they could see CPI if inflation keeps going lower. And I saw something from Goldman Sachs, I think tonight, where, they show inflation going back down to where it was, to lows. If that happens, that could certainly spark a rally at the second half of the year, especially if the market is forward looking, thinking the Fed's going to not only pause rates, and they could pause rates this year, and that could even cause a rally. But if the market starts looking forward enough where it says, hey, early 2024, they're going to start lowering rates, well, then the market could rally year-end 2023. So the hard part of making this prediction is there's a lot of data I don't know. And of course, if we knew the data, it'd be much easier. But I would say that there's a good chance that you see, over 4,000 in the S&P by year end, but you could see 3,000 or 3,200 in the S&P, in the first 2 quarters of the year before that happens. Now, of course, the perma bears are going to tell you that it's going to close at 3,000 at the end of the year, and that's possible. But the average bear market, guys, only lasts 9 months. And the problem with the S&P is we have so much bifurcation. If you look at the equal weighted S&P 500, I'm going to unmute you guys because I want to see if you can even make a guess. So the S&P 500, the VU is down about 20% for 2022. It closed down basically at a bear market. The NASDAQ was down 33%. Now that 20% on the S&P 500 is using the normal weight. So in other words, where the mega cap tech stocks have higher weight. So there's lots of concentration in Microsoft and Apple and Google and Amazon, not only in the NASDAQ, but also in the S&P 500. Now, if you use the equal weight index on the S&P, how much do you think it was down in 2022?
I'm going to say if it was down at all. I'm kind of curious.
It was definitely down.
Yeah, but not by much, because I think that the tech fall was pretty big.
Any number you guys want to throw out?
I'll say 6%.
Good guess.
Probably 10.
Yeah, I was thinking 10.
11%. So if you're invested in dividend stocks, you're smiling from cheek to cheek because all those growth investors that have outperformed you over the last 10 years that throw those 500% gains in your face, you're laughing saying, ah ha ha, I actually did well because I owned John Deere last year and it was up 20%, and your growth stocks are down 50, 60%. So, can we see 4,000? We could, but it could be extreme bifurcation too. It could be those dividend stocks like IBM going higher and higher and those growth stocks going lower and lower. Eventually that cycle is going to change, and those dividend stocks are going to get sold, and that cash is then going to go into growth when we start that new bull market. And I talk about that tomorrow in detail. But I'm going to say closer to 4,000, maybe above 4,000. I could see it even being 4,200. But I certainly, if someone's going to watch this and they're going to flame me in the comments, I could certainly see the bear case where you could say the market's going to close at 3,500 or whatever. I could see it, especially if the data doesn't support the market going higher. But with the market forward looking and being in a sell-off basically in growth stocks since November of 2021, you're talking about 2 years. If you're talking about November of 2023, that's 24 months of selling. There's a chance that starts to turn around towards the end of the year, Santa rally into 24. I'm not saying it's going to happen, and I'm not Tom Lee saying it's going to be 4,700 or 5,200 or whatever his number is, but I think 4,000 is a good educated guess, but it's just going to depend on the data. And so if the data is bad, you could see 3,500. If the data is really good, you could see over 4,000, 4,200. So those are kind of my ranges. But I like the fact that you guys are telling me 3,500 and you're still willing to come on a podcast and talk about the stock market, because most retail investors, they've taken their ball and they've gone home, they give up. What retail does, and I've been doing this 25 years, is they buy tops, they buy the highs, everybody's excited. Your Uber driver's telling you about a hot stock, whatever, and then they sell the lows, they retreat, they go into their hibernation, and then they come back at the next market top, and it's rinse and repeat. And this is why the rich get richer, and it's also why we have such a massive wealth gap. Because the people that should be investing in stocks to try to get ahead in life, number one, they get pressed because they don't have the money, and I get that part. But that's always the excuse. You can always find ways to lower your expenses, to make more money, and to save. Even if it's $20 a month in your Roth IRA or $100 a month or whatever it is, it's going to better your future than not investing at all. And wealth is created in bear markets, not in bull runs. You just realize that in the bull run. So when you're accumulating shares in the bear market, you're going to see that wealth on the other side when we get to that bull run. But it's going to take time, and we don't know exactly when that's going to happen. So I could say a lot more on that. I think 30 minutes ago I said 9 minutes, so we're back to an hour and a half, and that's just what we do here in the Bull Train podcast. But if you guys enjoyed this, make sure you subscribe to the channel, click the bell to get notifications. I've done 4 other videos this week. I did a Tesla video. I did a top 10 video of my top 10 holdings. I did a top 20 recession-proof stocks for dividend-type stocks if you're into those value-type names. I did a stock on Novacure today, and we've got the Patreon exclusive that gives you my whole portfolio of 59 stocks. You can join any tier and watch that video right now. And then we've got the conference, the convention, the Fired Up Wealth Conference. That basically is going to start today, and you're going to get a new video every single Friday in the private community in Patreon until the first week of April, that first Friday. So make sure you like this, comment. If you want to see more of us on the Fired Up Wealth YouTube channel, we need your support. So comment, like, share, watch the video again. And if we get enough, support around this, we'll keep doing these for free for you guys on YouTube. So anything to close it up, guys? Anything to say to the audience?
No, keep it tight.
Yeah.
Good.
Stay frosty.
Yeah.
Stay frosty, man.
All right. Well, I appreciate you guys. Appreciate you coming on tonight and had a lot of fun. Hope you guys have a great rest of your night. For those of you watching, have a great rest of your day. Take care.